Hey everyone, me Kevin here. This is going to be a hard video to make because I've got about over $1 million invested into cryptocurrency related assets and stocks. And folks, if what I'm about to describe ends up having serious issues at some point in the future, I could lose all of that money really dang fast. And I just want to make you aware of these potential issues because I don't actually think they're very, very clear to society. So let's make this as simple as possible and get right into it. Please don't hate me for talking about the scenario. I don't want people to think this is like doom and gloom. Just, it is a possible scenario. Give it a chance. If you deposit $100 with Gemini, you do not keep $100 because they're not a bank. They can't take your money. Instead, you'll get 100 GUSD. Let's say your name is Kevin. You get 100 GUSD. And maybe Gemini had the 100 GUSD to give you. So you get 100 GUSD. That's it. That's your name. What does Gemini get? Gemini gets $100. What can they do with that? They can pay their employees. They can lend it out to other people, which would be like hard money loans. So they could lend that money, or they could buy more cryptocurrency with it. If they buy more cryptocurrency with it, in theory, the more customers they get, the more institutional demand there could be for cryptocurrencies, and the more the cycle could repeat itself. It's like, oh, more deposits we get, the more crypto we buy, the more deposits we get, and then of course the more crypto goes up, the more people want it, right? Because things that go up attract people. Oh gosh, that's... Never mind, keep going. Pretend I didn't say that. Anyway, now I go to Gemini and I'm like, hey, you know what? I heard I can earn interest on my Gemini. Like, that's pretty cool. How do I do that? Well, folks, there's something called Gemini Earn. In fact, here it is, Gemini Earn. Put your crypto balance to work with Gemini Earn. You can earn up to 7.4% APY on your cryptocurrency. So what do people immediately think? They think, oh, cool, I can make 7.4% on my crypto because it's crypto and there's just not a lot of liquidity in the crypto market yet, so they're able to pay me 7.4% somehow. At least that's the answer I get when I talk to professionals in this industry. It's like, oh yeah, well, they need that liquidity or whatever, so they can pay you all that extra money. I just thought about this today, or well, actually yesterday for like 6 hours, and I'm putting the thoughts together today in a video, and I'm like, I don't know about this, because why? If I have 100 GUSD in this account and I start earning 7.4%, I think I have that 100 GUSD that I could always turn into dollars, which technically is true. GUSD, USDC, Tether are all technically pegged to the dollar, which means I should always be able to redeem my 1 GUSD or USDC or Tether for $1 US. But unfortunately, that relationship does not have to stay at $1 for any other reason other than people say that, well, we have $1 of backing for the GUSD in an account somewhere, and don't worry, it's fine. In fact, if you look at the GUSD price on, let's say, CoinMarketCap, the website, you'll see it fluctuates. And what happens is people who arbitrage come in, and when they see that GUSD is trading for 99 cents, they buy it, sell it at $1, and that's how you maintain the peg. You actually maintain the peg by trading it. Okay, so what happens to my actual GUSD when I sign up for something like Gemini Earn or any kind of interest-bearing? It doesn't have to be a USD, like a stablecoin. It could be any cryptocurrency. What happens when I get interest on my cryptocurrency? Well, I'm lending it. And I'm told that I'm lending this to institutional borrowers. And I'm thinking to myself, okay, well, I mean, like institutional borrowers probably aren't going to go bankrupt, right? Haha, well, that's where it gets really entertaining because who could be deemed an institutional borrower? So let's say I got my money over here at Gemini. They're going to lend this 100 GUSD now to some other institutional borrower. Well, let's just make up a company here. We'll call them CryptoFi. And Michael is going to come over to CryptoFi and he's going to deposit $100 with CryptoFi. And CryptoFi, because they don't accept dollars as well, they're going to convert that money to GUSD. Now, you've got Gemini that got $100, CryptoFi that got $100. They could spend this on whatever. Buy more crypto, employees, loans, whatever they want. They got cash, and we got a digital representation of that cash. But wait a minute, CryptoFi borrowed that 100 GUSD from Gemini. And now Michael says, hey, you know what? I want to sign up for, CryptoFi Earn. And I want to get 8% on my GUSD. Why would I not park my savings here? Heck, you know what? I'm going to refinance my house at 3% and invest it at 7% over here and make the 4% difference. Great, cool. Signs up for Earn as well. What happens then? Now the money goes over here to, let's say, Voyager. And Sally is going to deposit $100 over here at Voyager, and she gets 100 GUSD as well. She could keep that there. And literally this cycle could keep going on for thousands of iterations. Like, we could literally see one set of 100 GUSD sitting in 100 people's different bank accounts. And they're not really bank accounts, but that's what we think of them as. We think, hey, it's pegged to the dollar. It's pegged to the dollar one to one. And if it's pegged to the dollar 1 to 1, it's kind of like having cash, except it's kind of like a high yield savings account. But that's the problem. It's not. It's a loan. If they made you sign a document saying you agree to lend this and you could lose all of it, people probably would be less inclined to do this. But that's all in the fine print. They just say, hey, sign up and earn interest on your cryptocurrency. It sounds so wonderful. They don't make it clear that this is actually a loan. Now, that doesn't become a problem because right now, your GUSD doesn't fluctuate in value because it's pegged to the dollar and the markets are working normally. Prices are going up. You got nothing to worry about because as prices go up, there usually isn't stress in the markets, right? So when does this become a problem? Well, let's say Sally says, you know what? I'm going to get some margin. I'm going to buy Bitcoin for $100. I'm going to get $25 of margin from Voyager here, and I'm going to have $125 invested in Bitcoin. Now, let's say Bitcoin goes from 55K to 5K. That's a big drop. It's about 91%, right? Well, this is going to go down 90% to about $12.50. What happens now? Well, now Sally gets wiped out. Sally got destroyed. And this could be a flash crash. This could be a day. Sally instantly gets destroyed because you have smart contracts that instantly take her money away, give it to Voyager. The problem is Voyager is left with an asset that's worth a whole lot less than what they thought it would ever be worth. So now they only have $12.50. They just lost money. When a company or an institutional investor loses money, and this happens at scale amongst hundreds or thousands of different client accounts, because we have no idea how many people are on margin. We don't get that kind of transparency. From the system. We don't know. We don't know how often this GUSD is lent out over and over again. We have no idea. Let's say Voyager goes bankrupt. Okay, Voyager goes bankrupt because they're like, wow, we just had all these margin losses. Well, CryptoFi is probably going to have some issues as well, but I'll tell you the first thing that's going to happen. Kevin and Michael are going to be like, oh crap, please let me have my GUSD back. And all of a sudden, we're going to see a lot of people instantly demand redemptions. They're going to want, yo, turn my GUSD into dollars right now. The market's crashing. I'm freaking out. Okay? Now, and I know some of you are going to think, Kevin, come on, the same stuff happens in fractional reserve banking. Hold that thought. Okay? I'm going to put a little note down here. Fractional reserve banking. We're going to talk about fractional reserve banking. hold that thought, because there's a massive difference. Quite a few actual massive differences here. So what happens now? Now you've got two people who think they have $100 of GUSD in the bank. They're like, I want to redeem. Okay, well, what happens? Gemini and Cryptofy say, hey, look, we're in a crisis right now. No redemptions. Literally no redemptions. They could do that. It's happened before. Look at Bitfinex. Bitfinex, a Chinese company, uses Tether as their stablecoin, and in October of 2018, they stopped allowing deposits, and so nobody was able to convert US dollars or Chinese dollars or whatever, or euros, into Tether, and the one-to-one peg of the Tether collapsed. It went down as low as 85 cents to $1, and there was no market crash. Bitcoin was stable around $6,000 when that happened. No crash, no collapse, and Tether loses 15%. Boom, like that. But wait a minute, it's pegged to the dollar. Okay. You think Kevin and Michael are going to be able to go to the Fed and go, yo, I demand my USD? No. Fed's going to laugh you. They're going to laugh you out of the bank. Be like, get out of here. We did not bestow our trust on the GUSD. You tried to inherit trust of the USD. You tried to inherit the sovereign banking, the backing of the full faith and credit of the United States via a stablecoin, but it doesn't work that way. Quick example. I have, let's say, 1,000 of these erasers, and I say, hey, I will always pay you $1 for this eraser right here because the value of this eraser is pegged to the dollar. Cool. Who are you trusting? The US government or me? You're trusting me. If I go bankrupt, worthless. Same could happen here. You get institutional bankruptcies, the value of those underlying coins, which are corporate controlled. This is not government controlled, they're corporate controlled. USDC is a consortium. They're private companies that control USDC. Gemini, private company that controls the Gemini coin. It's not a government. The government cares about the people. Corporations care about themselves, right? No, now think about this. So we both go to claim the money. We're like, wait a minute, come on, Kevin. GUSD says they have passed through FDIC insurance and they got all the money sitting in a bank account. Like, we could just go claim the money at the bank account. Wait, who's we? Kevin does not own the GUSD anymore. Michael owns the GUSD in this example, or actually, it went to Voyager. So technically, none of these guys own the GUSD anymore because the money's been lent out time after time after time after time. So now you like, look, if you're getting interest, the odds are your stablecoin is lent out. So you have no claim to the money that actually exists in those audited statements. And look at this. You go to an audited, oh, sorry, that's just an example of some notes. You go to an audited statement of some company that basically gets hired by Gemini. So some auditing firm gets hired by Gemini to do an independent accountant's report. It actually does not say audited. It does say audit committee, but that could just be the audit committee at Gemini. So anyway, Gemini hires a CPA to say, hey, let the world know that our bank account shows we have $121 million and there are $121 million worth of Gemini coin in the bank account. They look and go, yep, numbers match, cool, pay us $1,000 for the signature, cool, thank you, bye. Actually, in a weird way, this is not signed by oh, there it is. Okay, it is signed by an independent accountant because I just saw the Gemini signature and I'm like, wait a minute. Okay, so it is signed. That's fine. So it's signed. This could be totally true. This does not have to be wrong. But this does not mean that Kevin and Michael have a claim to that 121. The last person to borrow it has a claim to that 121. And when Kevin and Michael get pissed that they thought they had something that was liquid like a savings account, and all of a sudden that money is not there and they start filing lawsuits and companies start filing lawsuits against each other for not being able to redeem Gemini, there are going to be people, or USDC or Tether, not to single out Gemini, sorry for singling out Gemini, there are going to be people who lose a ton of money just saying, get me out. Just give me 50 cents on the dollar, get me out. Here, you have the GUSD coin, you deal with it. I want out, I want my money, get me out of this. I thought it was like a savings account. I didn't realize all of the risks, I'm suing. And look, when you go to Gemini Earn, you have to go to the footnote. You have to go to the footnotes over here, like footnote 1, and it's tiny. Look how tiny this is, right? You probably can't even see that. Depending on availability, Gemini Earn is a lending program through which you may choose to lend your cryptocurrency to certain institutional borrowers. Okay, cool, so it's in the fine print, but let's be clear, it's not very crystal clear disclosure that you're not always going to be able to get your money back on a one-to-one basis because you might not actually have a claim to it. If that leads to lawsuits, the value of stablecoins absolutely gets obliterated and collapses instantaneously. And if that happens, the value of cryptocurrency. So all the people who are like, well, wait a minute, Kevin, like I have my cryptocurrency in cold storage. Great, it's worth a lot less now because if we see stablecoins collapse, there could be a lot of lost trust in digital currencies, which what backs Bitcoin? Exactly, nothing. So there's no JPOW. Like I said, there's no JPOW coming to save you. Now, some people are like, but Kevin, they say there's pass-through FDIC insurance for the money that's kept at Gemini to back up the GUSD. Do you know what that means? Probably not, and that's okay because I didn't either. I'm not trying to. The point of this is not to make anyone feel bad. The point of this is to open up our eyes collectively here and go, wait a minute, I never thought about that. Okay, so who gets the FDIC insurance, folks? In what event do you get to claim the FDIC insurance? The Gemini dollar accounts are held and maintained at State Street Bank and Trust Company. Folks, the FDIC insurance is not for Gemini. It's for state. It's based on the potential failure of State Street Bank. So if State Street Bank fails, this $121 million should still be around. If Gemini fails, that's not FDIC insurance for Gemini. Now, some people go, but Kevin, didn't I hear that, New York regulates Gemini and that there are like reserve requirements? Yeah, there are. In fact, Gemini is a New York trust company and it's, quote, regulated by the New York Department of State, like financial services or whatever. And they say, hey, Gemini's got to keep 10% of assets on reserves. Cool. Okay, fine. Now, multiple loans, by the way, are IOUs, right? So those reserve requirements could be scattered at different companies and a lot of other companies may not actually be registered. So what if Gemini is registered? Plenty of loopholes. That's one example of one. Here's another example of one. Let's think of a traditional bank for a moment. You think, oh, the bank's got to keep 10% of my money around. That's the fractional reserve banking system, right? Which I said I would talk about. Sure, they're supposed to keep 10% of your money around. This is true. But you want to know a quick little loophole that I found? Listen to this loophole. Funds in bank customers' retail checking accounts are shifted overnight into savings account and are therefore exempt from reserve requirements and then returned to the customer's checking account the next business day. Boom, loophole. That's how quick we just got around the Federal Reserve or banking reserve requirements. Well, what about fractional reserve banking? I mean, come on, Kevin. You just described a lending system. Sure, maybe it's not as clear that people are lending their money and maybe there should be better disclosures, but we could do better disclosures. We'll make you DocuSign something next time. No problem. Fine. But now I want to ask you this, okay? What is more likely to happen? And seriously, I want you to ask yourself, what is more likely to happen? Bitcoin going from $55,000 because let's say inflation doesn't manifest, which I know that in the crypto community, that pisses people off. It's like, what if inflation doesn't manifest? Ask yourself, is it not even 5% possible that inflation does not happen? I think we can all agree, yeah, that's possible. Maybe inflation doesn't happen. It's like, wow, we didn't turn into Japan and we didn't get inflation. Yay, America's great. Could happen. Could collapse. Whether that'll actually collapse Bitcoin or a certain cryptocurrency, who knows, right? Total speculation. We're just saying when and if a crypto collapses, this is what could shell shock throughout the entire industry. But what's more likely, since we're talking about, hey, this could happen with the dollar too, right? Fractional reserve banking. I mean, isn't banking the same? Let me ask you this. What is more likely? Cryptocurrency, or Bitcoin in this case, going from 55K to 5K. It's been at 5K not that long ago, right? Or what's more likely? 1 USD going from 0.84 cents, I think we're at 84 cents, 84 cents euro. So in other words, $1 converts into 84 euro here. Or the dollar turning into, well, in that case, the dollar going from 84 euro to going to 8 euro pennies. What is more likely? The dollar collapsing? The world's reserve currency collapsing? Or Bitcoin dropping from 55 to 5K, causing a bunch of margin defaults, causing liquidity issues at the institutional borrowers, leading to the collapse of stablecoins and potentially other cryptocurrencies as well. You have to ask yourself, I'm not going to answer that. You have to ask yourself, what's better? But I guarantee you, if something like this happens, and I'm in this too, okay? I'm in this. I'm a hodler. I'm like an OG hodler. I don't sell. I don't sell when there's pain. It's fine with me. No problem. I sell when things are up, when I'm making profits. But if this happens, you better believe you're gonna wish you had a JPAL. Thanks for watching. If you like this perspective, check out my courses down below on learning my perspective on building your wealth. Became a millionaire at 23. I'd love to teach you my secrets from investing in stocks, real estate, you name it. Use that coupon code link down below because it does expire on Friday. Thank you so much for watching. We'll see you next time.